evening, everyone. On behalf of Antique Stock Broking, I welcome you all to Q3 FY24 earnings conference call of Share India Securities. We have with us the entire senior management team of Share India Securities, represented by Mr. Kamlesh Shah, Managing Director, Mr. Sachin Gupta, CEO, Mr. Rajesh Gupta, Director, and Mr. Abhinav Gupta, President, Capital Markets. Now, without any further delay, I hand over the call to the Kamlesh sir for his opening remarks. Thank you, and over to you, sir.
Thank you very much. Good evening, everyone, and wish you all a very prosperous new year. I welcome you all to Share India Q3 earning call for financial year 2024. I am happy to share with you that once again we have delivered best quarterly results. Once again, we have proved our legacy of performance, growth, progress, and success. Though the quarter was difficult for trading activity, yet we recorded best quarter in the history of the company. This consistency in the growth is defined by our new initiatives launched over the period of time and the kind of diversified portfolio we have in financial service sector. I am feeling proud to say that 9 months of financial year 24, the standalone revenue grew by about 37% from 559 crore to 768 crores, and 9-month standalone profit after tax grew by 49.47% from rupees 143 crore to 213 crore. Also, if we see the consolidated performance for 9 months of this financial year, the revenue grew by about 36% from 748 crore to 1017 crore, and 9-month standalone profit after tax grew by 39% from 223 crore to 310 crore. And on top of it, if we compare the revenue and PAT of 9 months for financial year 24 with full year of 2022-23, it is almost equal to the revenue and profit after tax for the year 2022-23. To be accurate, we are at more than 93% in terms of both the performance indicator. Now, let us go through the best historical quarterly performance of the company for Q3 ended 31st December 2024 on consolidated basis. We recorded total revenue for Q3 as 374 crore, showing an increase of 35% year-on-year basis from 277 crore to 374 crore, and profit after tax for Q3 as 115 crore, showing an increase of about 25% year-on-year basis from 93 crore to 115 crore. The earning per share works out to 35.27 for the quarter. And the net worth also has increased to 1,405 crore at the end of 31st December. The consolidated results show all-around development in all business verticals. Contribution to the consolidated profit by subsidiary is a step towards the diversification and business sustainability. All the subsidiaries are performing well and aligned with the vision and the roadmap of the group. From increased AUM in NBFC to capturing SME IPO market in the merchant banking. From exploring new opportunities beyond Indian market in GIFT City, ISFC, and Singapore to strengthen market share in strategy-based trading overseas. From meeting surging need of the technological pioneering to the trading smile and changing lives. The group is intact with its value and vision. Now let us go through the standalone result for Q3 ended 31st December 2024. We recorded total revenue of rupees 284 crore, showing an increase of 46% year-on-year basis from 194 crore to 284 crore, and profit after tax for Q3 as 83 crore, showing an increase of 49% on year-on-year basis from 56 to 83 crore. The earning per share for standalone entity works out to 25.45, and the net worth of the standalone company is now 1,140 crores. The results are reflection of the efforts we have made during the past few years in enhancing corporate governance, strengthening risk management, diversified product portfolio, best management team, adopting new technology at every level, and composition of board of directors. Today, we have eminent personalities who are best in the area of work are on our board of directors. It is our combined vision which company is moving towards. Going ahead in the next quarter, we are poised to meet with our expansion plan with strengthened network base, building on the successful conversion of warrants into equity shares. And in next 9 months, all the warrants will be converted into equity shares. Along with internal accrual, it will further strengthen our network base. I thank all the stakeholders for their valuable contribution. May God bless us all. Thank you.
Thank you. I will now hand the conference over to Mr. Sachin Gupta for opening remarks. Thank you, and over to
Thank you. Yeah, thank you, Kamlesh sir. Good afternoon, everyone. I would like to thank everyone for attending this call today. This is a Q3 call for Share India. So, friends, I just want to tell you one thing that as the management of Share India is having a clear opinion that we should have a diversified revenue streams in the company, and we should have a more sustainable model in this industry. Like we all know, this particular industry is very vulnerable to the market performance, but we are trying to make Share India such a diversified company where market movements and all these things should not make any impact on the growth and the revenue of the company. So with this opinion, as in the earlier calls, we our focus was on using tech and innovative products for retail. We have recently launched our U-Trade algos, and it's a recent launch, so we are seeing good participation from the clients. We are seeing more enthusiasm in the clients, but this is a product where we need to put a lot of energy with the client in terms of educating them how this product is actually working for them. And we believe in next 2 to 3 years, we'll see a lot of participation in this particular product from the industry side. And again, going further, our focus will be on the retail side. Like we are setting ambitious targets internally, where we believe that in next 2 to 3 years, we should be having around 2.5 to 3 lakh customers organically and inorganically. So we are also looking for good tie-ups, if possible, with the companies who are having a good retail base. So after acquiring tech companies 2 years back, then Silverleaf a quarter back. So now our focus is on retail, and you guys will see that company is coming up with the aggressive retail acquisition plans and new innovative products. Especially, we have recently launched MTF for our customers. And we believe that MTF is a one product which was retailers were looking for it, and Share India is having a good risk management system and bandwidth to spread this product into the retail. And we believe in next 3 years, MTF book should be around 500 crores. So this is our goal. So with the diversified revenues, as I said, so retail business is one, algo business is one. And NBFC is doing good. HFT trading is there. Financial products like MTF is there. Distribution products like mutual fund, insurance. So there are different verticals, again, based on the financial markets only. So we believe that in coming years we should be able to see the good growth in the company. As we all know, India is looking to travel this journey from 3.5 trillion to 7.5 or trillion in next 5 to 7 years. So if this actually happens, that then it will reflect into the performance of financial market. More participation will grow. People style of investment will grow. So we believe that next 5 years should be extremely good for all the participants. And Share India is ready to encash on this opportunity with all the verticals are technologically supported. Good team we have, good network we have in balance sheet. And next 5 years we are going to fire from all the cylinders. So we believe that we'll achieve our good growth in next 5 years also. Thank you very much.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask question may press star and 1 on their touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have our first question from the line of Mr. Darshit from Robo Capital. Please go ahead. Mr.
Hello.
Darshit?
Yeah, am I audible?
Yes, please go ahead.
Yeah, thank you for this opportunity, and congratulations on good set of numbers. I just want an overview, or you can call it guidance, or an internal target about growth in revenue and margins for the next 2 to 3 years. How do you see, what are the parameters that you think will lead growth?
Kamlesh sir,
Sachin ji,
answer this question? Okay.
Sachin ji, आप बताइए ना.
Yeah, okay. So the thing is this, that last 7 years we are growing like more than 30% CAGR. Base was small and opportunity was good. But as I said, we spent last 2 years in creating new verticals, getting good tech support behind our back. So like all the verticals are ready. Like recently we focus more on merchant banking side. I believe next year we all will see good growth in that particular area also. Especially we are focusing on SME segment. So NBFC will see good growth. Retail broking will see good growth. As I said, organically, inorganically, both we are going to, focus on the retail side. And so we believe that next 5 years, as I said, India is looking good, well settled, and politically there should not be a big challenge. So if all things went well, so next 5 years we are targeting means at least 20% CAGR growth should be there for the company.
Yeah, so I'd just like to add what Sachin sir has already mentioned in this. We have always maintained that we believe that we would be able to maintain a CAGR of 20% plus, as he mentioned, for the next 5 years. In fact, in the last 2 years, we have surpassed those expectations as well. All the activities that we have done in developing our tech stack, in strengthening up our employee strength, setting up the corporate governance practices, will help us, shoot from here and deliver a good set of numbers going forward as well. Internally, we are very optimistic that current businesses that are there will continue to grow in at least 20% plus CAGR growth, and any additional client acquisition that we might do or any additional growth that might come because of U-Trade algos or for any other product that we launch will directly add on to our top line and bottom line. And from a PAT margin perspective, as mentioned historically, we intend or we believe that we will be able to maintain a PAT margin of around 30%, which has been there for the last 9 months or so. So this is the kind of PAT margin that we would continue to maintain going forward.
Okay.
One more point I want to add here about the insti-broking. So as I said, we are trying to develop different verticals. So insti-desk is one vertical we just started, and a good set of team is there. Team is recently we started. So I believe that next again this new vertical. So next 2 to 3 years we'll see good set of numbers coming from the retail. So all focus is on serving clients. So you guys will see in coming years we'll be talking about more of retail, more of wealth products, more of GST things. So Share India keeping control on the current revenues and current verticals. So we'll be focusing more on the retail side in coming next 2 to 3 years. So we believe that putting all things together, we should be able to achieve 20% CAGR for next 5 years.
Okay, great to hear that. Thank you so much, and all the best.
Thank you, sir. We have our next question from the line of Simar from Negen Capital. Please go ahead.
Yeah, hi, good evening. Thank you to the management and congratulations on a great set of numbers. So I know that you had given a guidance of 25 to 30% CAGR for the next 5 years on your top line. Can you give me, and you were very bullish on the previous Concall regarding the commodity segment as well, in the MCX and the NCDX. So can you talk more about the commodity segment? How much is it contributing right now to your overall revenue?
So, unfortunately, what happened in last quarter, NCDX business has gone down drastically at the exchange level. There was some interference from the government side about the inflation in the certain commodities, so they shut down some fancy commodities. So exchange level volumes have dropped drastically. So that business has gone down. And on the MCX side, again, unfortunately, they were they were transferring their current tech stack from FT to TCS. So that took major hit, and TCS is not yet stable in the market. TCS yet not stable in the market. So it took a lot of time to transfer from FT to TCS. So we all have to take big hit in MCX also. So we believe that MCX should pick in 1 month or 2. So for the next financial year, MCX business will grow, but NCDX we are not seeing any growth at all. But infrastructure-wise, everything Share India is there. Numbers are we were able to match the numbers, but growth was not there because of all these challenges which were beyond our control. So we believe that if MCX will be able to stabilize with the TCS product, then next financial year MCX should grow big. Right now the volumes are down drastically.
Yeah, I would just like to add a couple of points what Sachin sir has already mentioned in this. So if I have to talk about commodities specifically, the bullishness in the last Concall was more to do from a strategic point of view in long-term scenario. And even in the last Concall, we had mentioned it that this being an election year, we might have to maintain a certain sense of posterity when it comes to the results, especially in the commodity, because given the election scenario that might plan out. So that's number one, to point that. Number two, all the scenarios that Sachin sir has already mentioned has more to do with the quarter impact. We believe mostly in Q3 all of the elements have been taken care of. And if anything else, Q4 might see another impact of it. But post-elections this year, we continue to maintain a very strong bullish stance on the commodity segment. And we are very hopeful that it would continue to cut traction in coming years. On a 9-month basis, if I have to see beyond the quarter-on-quarter impact, on a 9-month business, we have seen a certain amount of growth. On a year-on-year basis, in terms of ADTO, though the ADTO would have been similar, of around 1,500 crores for this quarter as well in the commodity segment. But in terms of top line, the impact has been better. So if you see, on a 9-month basis, we have performed better in the commodity segment. And till up to elections, we might see a certain sense of conservative when it comes to commodity business, but post that we are really hopeful that it will continue to grow big.
Sure. I would like to add one point here.
Yes, sir.
Hello. Yeah. I would like to add one point here. We are taking this opportunity to see that the commodity business, which we consider one of the most strategic business and which has a lot of growth potential, we are getting all our offices ready. Currently, majority of the business is being done from Delhi office, but now we are getting Bombay office prepared and Jaipur and Ahmedabad office, so that in next phase we should be able to capitalize on the growth targets based on the multi-locational working. Thank you.
Sir, I would like to add one more point for the FYI for the all the friends that recently Share India has also got an award from the MCX. Kamlesh sir can elaborate. Sir, can you please tell about the award?
Yeah, we got Member of the Year award from the MCX. So that is when Sachin ji was talking, he was talking in general, and exchange performance because of various limitations. But from our end, we have made constant efforts to see that we upgrade our products, we maintain our market share, as well as try to see that all the technology that we have access to could be best utilized, and all this is making an impact. And we are constantly getting awards for last 3 years from MCX, being the Member of the Year award. So that is also one of the great. We have a very good team led by Mr. Suresh Arora, and I think as Abhinav has already told, maybe in next quarter or so the volume will pick up, and we'll be direct beneficiary of the same. Thank you.
Sure, sir. Thanks a lot. That was really helpful. Thanks for the answer. I'll follow back in the queue. Thank you.
Thank you, sir. We have our next question from the line of Anmol Das from Arihant Capital. Please go ahead.
Thanks for the opportunity. Am I audible?
Oh, yes.
No, ma'am. There is some noise, so we're not able to hear you, ma'am.
Hello?
Yeah.
Yeah, am I audible now?
Yeah, better. Very faintly. Yeah, better, but very faintly. Yes. Please go ahead. Please
thanks for the opportunity. Yeah. So my first question is with respect to retail mix. So could you just share what is the retail mix in your revenue and what is the strategy you are following for the retail business expansion?
Okay.
Abhinav, can you please take a minute?
Yes, sir. So I'll take that. So in terms of retail business within the scope of entire thing, as we have mentioned, we have around 20-25% from the coming from the retail, which includes retail of both NBFC and ma'am, I think there's some noise. Can you
ma'am, there is some noise.
Can you mute your call?
So it is getting echoed. Yes.
Yes.
I think it's better.
Yeah. So, just to elaborate what to answer to the respect of the retail section. So, as we have already mentioned that we have around 10 to 15% of revenue share coming from retail specifically, which excludes any revenue from NBFC or institutional segment that we have created over the last 1.5 to 2 years. And as far as the expansion retail is concerned, as you guys are aware that the flagship product of muted algos was launched in June this year, we have seen quite a good traction of both online and offline in that segment. Online continues to remain the mainstay as of right now. Since its launch, more than 20,000 customers have joined that platform on trial basis. We have been able to do a good conversion rate of around 7 to 8% on an activation basis for that product platform, which for any online product, is a very heartening number. Going forward, we are very gung-ho about the offline business picking up in terms of UTRED algos. And not only the UTRED algos, in order to cater to those offline clients, we will continue to cater products like MTF, mutual fund advisory, and maybe to some extent help them with merchant banking activities. We are very hopeful that business would get a good revenue traction, also customer acquisition as well. And alongside, we are, as we said, we are committed to our task of around 3 lakh customers in 3 years, for which we are hopeful for both organic and inorganic opportunities in the market.
Okay, sir. And one more question. So, how is the algo trading market faring among retailers, and how much of the market share do we see in our company?
I'm sorry, I could only hear noise from your line. I could only hear.
We could not hear you.
Yes.
Hello.
Yeah.
Yeah, I just wanted
there is
to
a
ask.
background noise at your side.
Hello.
Yeah.
Yeah, please.
I just wanted to ask about the algo trading market trading among retailers. So, how much of the market share do we see in our company?
Okay. So, ma'am, good question. I think I would like to answer that mostly from a top-down approach. If you analyze the data, currently there are around 3.5 crores active traders in the market as per the exchange data. And if we go a deeper level than that, there would be almost around maybe 70-80 lakh customers who would have ticket size of more than 10 lakh kind of a ticket size for in the market. But algo trading in India has been a very unorganized sector. We at Share India are very hopeful that we being the Share India and being a regulated player with the tech stack in-house developed from Utrade, Silverleaf and AlgoWire are at a uniquely position to consolidate this market and convert it from an unorganized to organized market. As far as the market share is concerned, there is no specific case study has been done in order for the algo for retail. But algo for retail is a product which is designed more from a future perspective and not from a current perspective. So currently, though the number of customers might be very less who are using algo at retail level, we believe going forward, algo as a product at a much broader level would be used by Indian market investors to enhance their returns from the market.
Okay, yeah. Thank you. I'll join to follow up later.
Thank you. We have a next question from the line of Rahul Sinha from Amar Price Financial. Please go ahead.
Hello.
Yes.
Yeah.
Hello. Very good afternoon, all of you. I have a question that could you please elaborate on the channels through which client acquisitions are taking place? And additionally, if possible, could you please provide some numerical insight into the acquisitions made in the first half and shed light on the distribution on these new customers?
Sorry, can you please come again? Distribution of new customers is what you are asking currently? If I understand
yes,
it correctly.
Could you please elaborate on the channels through which the client acquisitions are taking place?
Correct.
And additionally, if possible, could you please provide some numerical insights into the acquisitions made in the first half and shed light on the distributions of these new customers?
Okay. So, though we don't track this kind of a distribution, what you are referring internally, but off the top of my head, I would try to, put some numbers so that you can understand it better. Internally, those are not the MIS criteria that we follow. So, we launched the Utrade retail product in September last year. September 22, not 23. We launched our initial campaigns for the IBT. So the total number of retail customers that we have acquired has been around 13 to 14K in the last 1.5 odd years, right? Of most of which, and I'm talking about, when I talk about customers, I'm talking about KYC registered customers. So they are not trial or any other metric. A lot of them came because of the Utrade IBT that we had launched in September last year. We launched the Utrade algos in around June this year, post which the marketing campaign started in September 23. And since then, we are seeing around, on an average, around 1,000 customers a month, approximately. And most of them are coming through online mode currently. In fact, when I say most of them, around 70-75% of them would be coming through online. We just started with our offline customer acquisition mandates now. Q3 was the first quarter, in fact, when the offline team was given mandates in terms of customer acquisition going forward, in terms of algos going forward. And going forward, we believe that the growth of customer acquisition in offline would far exceed the online customer acquisition at a much lower cost in that matter for sure. So going forward from offline mix of both Utrade algos and retail customers would tilt towards the offline. But as of right now, most of the customers are through online.
Okay. Thank you so much, sir.
Hello? Yeah.
Thank you, sir.
Hello.
We have the next question from the line of Harsh Shah from HSBC Asset Management. Please go ahead.
Yeah, good evening everyone, and thank you for the opportunity. One of the things that you mentioned that you have received a leading member of the exchange award from MCX. Can you just please elaborate what does that mean? Means are you the top 5 broker or top 10? What is the reason that you received this award?
MCX every year they give recognition awards to the brokers in different categories. So Share India got this is a very prestigious award. This happens once in a year. So Share India was chosen the member of the year. So that was because of the primarily because of the turnover from the broker. So as I explained earlier, exchange has taken a big hit when they were transferring their tech from FT to TCS. But Share India at their level, like we were pushing a lot, and we were able to somehow match our turnovers and overall participation. So our market share is more than 10% in MCX, and we maintain our leadership in that sense. So primarily that is for the highest turnover. So we don't know in terms of top 5 or top 10, but yes, we have more than 10% market share.
Understood. That is very helpful.
The most importantly that the award was for the member of the year or not any subcategory that the exchange might have for that.
That's true. Yeah, that is the reason I was intrigued. And second question is, you mentioned that right now there is a temporary hiccup because of the transition. It is transitionary in nature, but MCX volume has been going up month after month. So in this temporary phase, are you still maintaining that market share or are you losing market share?
Yes.
No,
we are not losing. We are not losing. So we are still maintaining the market share. And as Kamlesh sir has explained earlier, that earlier we were only focusing on on a certain region, but strategically, Mr. Suresh Oda, who is leading this particular vertical, he has focused on now Ahmedabad, Jaipur, Mumbai side also. So we believe that our turnover will go up. Even exchange turnover will go up. We'll be able to maintain the market share in next financial year also. We are very aggressive on commodity side, putting more capital in terms of bank guarantees with the exchange and training more traders and and also growing in different geographies like Bombay, Ahmedabad, Jaipur also. So I believe that we'll be able to maintain this market share.
Yeah, I'd just like to give 2 technical points to that answer so that it might help you better. So, number one, what we are very clear that commodity remains to be a very strategic point for us, and we will continue to cater to that segment. But there are 2 types of transactions or the turnovers that are you referring to. Number one, as you see, MCX is an evolving thing, and we believe that it will continue to evolve. And once the exchange matures, we believe a lot of turnover will shift from futures to options. So though we will continue to maintain turnover, our future turnover will more or less stabilize to current numbers. When you look at the exchange data, there would be an element of futures and options as well, but we believe that we would have an edge in both future and options in that segment as well. And we will gain market share when it comes to the option turnover in that segment, number one. Number two, when you refer to MCX turnover, sometimes people look at the notional numbers. How we analyze is essentially in terms of premium turnover and not in terms of notional turnover. And thirdly, if you look at our ADTO numbers, we continue to maintain ADTO of around 1,500 odd crores consistently for the last 4 or 6 quarters at MCX.
Sorry, just one. You mentioned that your market share with MCX is more than 10%. Can I know that same number from premium options ADTO market share?
Yeah, so it's from an M6 perspective, it's a very difficult number to be able to segregate in that matter. But what we understand that we have more than 10% market share in that sense. Giving a particular numbers, we would need certain data from MCX, which I think is currently not available in public domain.
Understood. Just another question is, last week there was a circular uploaded on MCX website giving them permission to have DMA for FPIs.
Yeah.
Will Share India have any beneficiary gain out of this?
100%. So we have a relationship with more than 40 SPIs from Dubai, Singapore, and other parts of the world. So some of them are eagerly waiting for the DMA. So once the DMA will start, definitely it is going to benefit us. So as Abhinav explained that, once this tech transition will stabilize, MCX is a very innovative exchange. They like options. They made a huge success from crude options and NG, and we believe they will come up with they will continue with the innovation with the new products. New option products will come out, like DMA is also there on the card. So all these things will help us growing our revenue from this particular exchange.
Understood. Those were the questions from my side. Thank you and all the very best.
Thank you.
Thank you, sir. We have our next question from the line of Mr. Karan from Get Well Soon Hospitality. Please go ahead.
Hello.
Yeah.
Evening, everyone. My question is regarding Share India's strategy. As Share India is catering to 2-3 diverse business verticals. What currently tops our priority list? Could you outline the key segments we are emphasizing for the medium term?
Good evening, Karan. So as we explained earlier, last 2 years our focus was more on getting the tech, good tech behind us. So we acquired 2 tech companies in October 2021. So recently we acquired an HFT company. So last quarter. So idea was to grow in international markets. So you will see in next 1 year, Share India will start having presence in different world markets. So like next 3 years, strategically our focus will be more on all retail products, like acquiring direct retail, organically, inorganically, offline, online, pushing neutral algo products for the retail, heavy marketing budgets we have, a good team we have on the ground for the offline sales. And MTS we are launching. InstiDesk we started. With InstiDesk we are not only focusing on institutions, we are focusing on PMS, AIF, and good team is there on the InstiDesk. We believe next 3 years our focus will be more on the client servicing side, let it be institutions, let it be retail. And you will see after 3 years the dream is very simple. On the broking side, Share India should be there for the retail, HNI, Algo. On Insti side, we should have good institutions with us, serving them, for derivative trading, for long only funds also. And NBFC is doing superly good. Again, NBFC team is very bullish on the business for next 3 years. So we are also trying to, diversify current portfolio to the more collateralized portfolio. Next 3 years you will see NBFC will gaining too much ground on side of collateralized loans. So NBFC, merchant banking, retail, all these products will be customer servicing side, not much on trading side. On trading side, what we are doing, we are keeping strong control over it. And trading we might expand in India organically what we are doing, also in international market. So our focus will be on servicing clients. That will be our focus in next 3 years.
Sajin, can I add one thing?
Yeah, sure.
Yeah. See, in short, our focus is on building organization. We have one of the best management team. We have about 30 people from the promoters group participating into day-to-day activity. In addition to that, in recent 2-3 years, we have brought many professional management people joining the company. On top of it, we have now very highly dignified board of directors and, tech acquisition and other related activities. The other point which I would like to clarify here is that, our focus is only on financial services. So whatever development or whatever growth has happened or whatever diversification in the portfolio has happened is concentrated on the financial services, which is our strength area. So we are consolidating. We are getting ready for the next phase of development, and we are geared up to take the maximum benefit of the growing market size and retail participation. So our focus is in line with the development in the market, the development in the economy, the development in the growth of retail investors, and the opportunities that are available in the overseas market. And all these are achieved through tech-based solution. So technology would be the key growth driver for all the initiatives that are taken by Share India. Thank you.
Thank you, sir. We have our next question from the line of Sarvesh Mutha from Antique Stock Broking. Please go ahead.
Yeah, hi. Thanks for the opportunity. Sir, my question is on the employee count. So last quarter we had reported around 1,500 plus employees, and this quarter our employee count has gone beyond 3,500. So can you highlight what exactly has happened over here and which segment are these hiring being done for?
Sorry, so total employee count you said has gone up from 1,500 to what number?
3,500?
Yes. Yeah. So I would just like...
Abhinav, please add on.
Yeah. So, as we have very clearly mentioned that we continue to maintain a 25 to 30% CAGR in our organic business. Plus, as we are going on retail acquisition, we would see a lot of employees getting added into the traction. So if you look at our branch count has gone from around 70 to around 150 in the last few quarters. In the event what has happened, a lot of franchisee that were there are now existing as branch model. In order to, get into the entire retail acquisition space, we would need to add an employee strength. So a lot of employee strength is being added because of that. Number two, in our standalone and our traditional business, we continue to engage with more traders and continue to hire in order to grow that business consistently. So, yes, there has been a spread of employee count in the last 6-7 quarters, especially in the last 9 months or so. But going forward, we believe it would stabilize in the next maybe after 2 or 3 quarters.
Okay, but so I'm seeing this data. So like for Q2, you had reported 1,500.
Sir, your voice is not clear. Sir, your voice is not clear at all.
Yeah.
We don't hear you clearly.
Yeah. So I'm saying on behalf of so last quarter you had reported 1,500 employees, and this quarter is 3,500. So like within one quarter. Within one quarter,
it is not because of that one quarter. It's just that in the 9 months we were able to. So what has happened? The last quarter number was 1,500 plus. We hadn't done the employee count exercise in the last half year. So that's why within one presentation you are seeing quite a big jump. But if you look at it a more detailed and annual report presentation perspective, you would realize that we always had around 2,000 odd employees. The number has increased in the last 9 months or so. It's just that in the last presentation we were not able to consolidate the number of employees in the presentation.
Okay. That's it. Thanks a lot, sir.
Thank you, sir. We have our next question from the line of Raj Tatar, a shareholder. Please go ahead.
Good evening, all of you. My question is related to the CAGR growth that was the guidance that was given. So in the last quarter, it was mentioned that for the next 5 years, we expect to grow by CAGR 25 to 30%. But in today's guidance, we are mentioning upwards of 20%. Can you please elaborate on that?
Sir, so broadly, Kamlesh, please continue, please.
No. We always would like to be conservative. If you see the performance for the 9 months, it is already, showing the healthy growth of upward of 25%. So, this is what we believe, we have discounted all the unforeseen, events and the global turmoil or any other events, so that, we would like to be conservative rather than, liberal on the numbers. But you will see from the actual performance that, we have delivered more than, what we have mentioned in our conversation.
Yes, and also I would just like to add, when we mentioned for 25 to 30% CAGR growth, since then the company has grown at a faster rate than 25 to 30%. We maintained that when we acquired U-Trade. So the first time that we gave the 25 to 30% guidance essentially was in March 22, right? And now we are sitting at March 24. So in the last 2 years, company has grown at a much faster pace, both in terms of top line and bottom line. So even though we believe that the end point remains same at 25-30% from those levels, we believe that even with that 20%, we would be able to maintain an entire CAGR of around 25 to 30%. And as Sir said, it's much more prudent on our side to remain conservative on this because future, as everyone says, will flow out on its own scenario. But we continue to remain bullish both on the traditional business and any additional business that we are able to grow because of the efforts that we have taken in the last 2 years, including mutual fund advisory or institutional business or merchant banking or NBFC business will add on to the bottom line and improve our CAGR growth.
Just to elaborate,
please.
Please mention, see, in my initial remark, I have mentioned our performance for 9 months. The revenue has grown by 36% in 9 months, and the profit after tax has grown by 39%. So, that itself shows a lot of, things about the actual performance. Going forward, as that is the best policy to be conservative and to achieve more than, what we promise. Thank you.
Thank you. We have our next question from the line of Mr. Abhishek, a shareholder. Please go ahead.
Hello. Hi everyone. Good evening to all. First of all, congratulations on the wonderful results. My question is related to NBFC. Could you please give a broad-based breakup of loan book and borrowings in NBFC? Additionally, what are the geographies we intend to grow NBFC books?
Rajesh sir can answer this question. Rajesh sir, can you please answer this question?
Hello. Good evening, everyone. Our loan book as on 31st December was 235 CR. Out of this, 169 crore was from women entrepreneur loans, and the remaining was from SME loans of bigger ticket size. These are the two main breakups, and our borrowings are from banks, from corporate intercorporate loans, and from our relatives also. As far as our geographical expansion is concerned, in these 9 quarters, we have opened our branches in Bihar and MP, and we will continue to grow in these areas looking forward. And in the coming period, we also looking to see our expansion in other states also, including Odisha and Jharkhand.
Yeah. So just, what Rajesh sir has, just to add on to those points, we have closed this quarter with around 57 branches for NBFC and more than 67,000 or around 68,000 active customers from the NBFC division as well. So the client base in the NBFC
आपण
division
ज्या व्यक्तीशी बोलत आहात त्यांनी आपला कॉल होल्डवर ठेवला आहे. कृपया लाइन पर रहा. आप जिस व्यक्ति से बात कर रहे हैं उन्होंने आपके कॉल को होल्ड पर रखा है.
Hello. Yeah, am I audible? Yeah. So 57 branches and around 68,000 customer base for the NBFC.
Okay. So as we are talking about the expansion of this vertical, are there any new products we are planning to launch in NBFC?
Sure. As already Sachinji has told, that we are more interested in collateralized products. We are looking for the secured loans to SME and like that. We will definitely grow our book in SME loans.
Okay. That's the answer to my question. Thank you so much.
Thank you, sir. We have our next question from the line of Vikas Jain, a shareholder. Please go ahead.
Hello, I'm audible?
Yes, sir, you are audible.
Sir, congratulations for good set of numbers. Sir, I wanted to know the view of management that in near future, management of the company intends to give any bonus share to the shareholder as a corporate action or corporate benefit to shareholder.
Sir, as of right now, there is no plan that is presented to the board on this. As and when there is certain things that might come or is presented to the board, appropriate disclosures will be made to the exchange.
Okay.
But sir, you will appreciate that every quarter company is giving some dividends. So as per the dividend policy, so we have distributed it in every quarter. So, but as far as any corporate action, there is no discussion with the board.
But in near future, management have a thought
might be, but right now we don't have any proposal.
Okay. Thank you, sir. Thank you so much.
Thank you. We have our next question from the line of Raj Tater, an individual investor. Please go ahead.
Sir, our core business, which is the broking business, has grown phenomenally well over last so many years. And now we are diversifying into merchant banking, NBFC, insurance broking businesses. Sir, all of us know that NBFC is a huge business in itself. So are we diversifying too much in 3-4 new businesses at the same time instead of just focusing on maybe NBFC, which is like the largest business in India? I wanted your views on that.
So I will start the answer, then Rajesh sir can add. So the idea is, as I explained earlier, the idea is that as a group, Share India should be a diversified group. So things should not be like that if, a stock market went down, like, let us say, by 50%. So all the stock market related revenues definitely will dry up. We have all experienced it in last 15-20 years. Multiple times, we see the periods where there is no revenue from any vertical related to stock market if market performs bad in a certain period, correct? So with that opinion, we were diversifying into new verticals which are not directly related to the stock market. So NBFC and insurance are the two verticals in our kitty. So NBFC is quite big. But the idea is we will diversify within NBFC also. Like Rajesh sir explained, collateralized loan and non-collateralized loan, personal loan types, everything will be there. But definitely we are not going to take much leverage with NBFC. We are not going to take too much loan or on books that, it should not pose any risk to the parent company. So it should give us good revenues. It should grow. But eventually it should not be burden or risky for the group as a whole. So with having a conservative opinion, will grow organically and will go slow. But definitely, even slow, I didn't mean that, will not grow at all. We'll grow at a decent pace. And now we have started looking for diversifying the verticals within NBFC. So Rajesh sir can add here.
Rajesh sir?
Rajesh sir, you want to
okay.
any comments?
Okay, I have unmuted it. As Sachinji has explained, we are definitely keeping pace with our holding company. Our loan book as on 31st March 23 was 127 crore and now it is 235 crore. Our branches were 42 and now these are 57. We are adding SME loans, we are adding collateralized loan, and we are adding states further. Yes, definitely we are not growing at unexpected pace. We are conservative. As RBI has already raised the red flag regarding unsecured personal loan, we are more conservative. We have installed more checks in our system to onboard the clients. Like we have fixed some exposure of the client, which we are boarding total exposure of loan of the client, total monthly installment he is paying, like that. So we are more focusing on quality of our AUM. It is for only this reason that our GNP are only 0.9% and net NP are only 0.66%. So we are growing, but keeping the quality of our AUM.
Yes, and just to answer your question, only from an NBFC purpose, what Sachin sir and Rajesh sir are trying to tell you is that internal accruals and equity remains the main source of funding for that book. And essentially, though we are very positive about the outlook of that, but the growth would be very streamlined in that sense for that business domain. And yes, as far as the diversification into other division is concerned, you would appreciate that the diversification is not about only a quarter impact. It's more from a strategic angle that we want to pursue and become a financial conglomerate and offer multiple financial services. And we believe all of these businesses will start giving traction maybe a few years down the line. We are just sowing the seeds right now and putting into the efforts of creating those divisions. Maybe a couple of years down the line when you start keeping their impact, the entire impact on the income statement or anything of that matter.
Okay, thank you.
Thank you. Due to time constraint, that would be the last question of the day. I would now like to hand the conference over to Mr. Raju Barnawala for closing comments. Over to you, sir.
Thank you, Kamlesh sir, and Share India team for giving us this opportunity to host the call. And good luck for the future performance. Thank you.
On behalf of Antique Stock Broking, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thank you, everyone. Thank you.
Thank you, everyone.